The markets are breaking, and I don't use that term lightly, nor do I use it as a clickbait title. We literally saw the markets break. What I mean by that is that they did something different to what they normally do in a traditional long-term bull market. The structure has flipped, but that doesn't mean that the top is in and that the markets are about to fall out of bed. It's actually the opposite right now. However, the signs are there. Just like I showed you in December of 2024 on the channel to the public, we saw the breakdown of the home builders ETF. Now we're seeing this across the board, across the US. And I think the most difficult thing moving forward from this is probably going to be the politics, because there is one party in power. They are leading calling the shots, and this isn't going to end well, at least from what I can see and what we've seen over the last couple of 100 years when it comes to cycle data. So I'm going to explain that in today's video. Hit the like button, subscribe to the channel. It's your home of macro cycle analysis. Let's kick it off. Now we've got to look at the US dollar, the yields, the bonds, the boring stuff, I guess what a lot of people think about as being traditional finance, of course the stock markets, and the beloved Bitcoin and cryptos. So like I said in the intro, I think things are beginning to break, but this doesn't just mean that things break and it's all over. You see these pieces to the puzzle continue to get stacked upon each other, leading into a peak, and then the inevitable collapse from that point. And I guess people will look back at this time thinking, oh, how didn't we see it perhaps? So in terms of the breaking itself, the breaking down, when we look at the chart patterns here, in particular is the US dollar. That is coming right back down. This is one of the lowest levels it's been in a very long time, and the lowest weekly close that we've seen in 3 years. You've got to go all the way back to March, April of 2022 before it had that big run up into the top. And so I guess to make a quick mention, just because this is happening right now doesn't mean that you can't have some relief rallies in the markets that are already trending down, and then the trend continues. And the same deal for some of the markets that we'll look at today that are going up. They might be going up now, they might have a bit of a pullback. That can take weeks to months, and then you see that final blow-off move that basically puts that nail in the coffin that the cycle is over, the peak is in, and then we begin the cycle to the downtrend, and the whole thing rinses and repeats and starts again, as we're looking at with the 18-year cycle. So we're getting towards the end here. So to take a recap of the US markets, we've got the US dollar here breaking down. It's now reached 100% of this range. The range I'm looking at here is the weekly swing as it first broke down. The reason I mention these is that you can see areas of support and resistance, like we see at 50% levels, and then also at shorter term turning points, so that even though we're seeing markets breaking down, you can often forecast a pause in the trend, and then on the macro, you continue to see the breakdown occur. So at this stage, we're at 99. We have not been at 99 since July 2023, and in terms of the closes, as I said, back in March, April of 2022. So coming up to basically down three years here. So why is it so important with the US dollar? Well, it looks like the US is trying to make things cheaper over there as well, so that people start to buy US goods and obviously increase their surplus. Rather than being in a deficit, they need to be in their surpluses. At least that's what the administration now believes. So we're seeing this US dollar collapsing. We're also seeing the bonds last week absolutely skyrocket. Well, this was the 10-year yields, and then the bonds were going the opposite direction. The bonds were getting dumped, but the yields on them were increasing. So whoever's selling, and there's a lot of speculation when it comes to the media. I don't really want to get into that because you can leave that for a lot of the headlines. But here we're just looking at the price chart. From 122, it dumped to 111. In terms of a percentage, that is pretty significant, 8.7%. What's even more significant is the yield, so the 10-year yield. And I see this in the headlines starting to come up a little bit more now because of the significance of this move. It's a 19% move in a matter of days. The 4th to the 11th, so 1 week, it went up 19%, from 3.86, 3.87 to nearly 4.6%, closing the week out at 4.5%. So it seems like the market is anticipating that interest rates are going to have to go up, even though I guess retail was expecting a lot of interest rate cuts. So even just last week, we saw the cuts go from 4.5% down to 4%, and then come all the way back up. So there was a big flip from what the market thought. They thought we were going to get this big cut, and now we're back up here. So again, I come back to why is this so important and how is it all breaking down? Well, normally we'd see that the US is a bit of a stronghold here, and that there's more certainty with the US, and that's why they've got more companies or more countries to be buying the bonds, and we're definitely seeing a bit of a breakdown here. Now, it's not completely nail in the coffin. As I said, we could be seeing any sort of relief rallies. The significant breakdown point I'm watching is underneath 110, and then the major one, because that's the last swing bottom here, there's a major one back here at around 107, and that would take you back out to October 2023, and then on a longer term basis, that could lead to further downside to the next support levels, 104, 102 and a bit, 97, and around 89. But obviously there's a bit of work to do to get back to any of those sorts of levels. So let's just see how this continues to play out over the coming weeks, if not into the next couple of years leading into this final peak. More so in the months. Okay, so back to the yields. We've seen a pretty significant increase here, pretty significant higher close as well. It's important to have a look at any invalidation, so I'll make a quick mention of those. Breakdowns of these levels at about 3.5%, and then these significant lows here would mean that we're seeing otherwise. Maybe Trump has been able to unbreak what has broken, and you would see an easing here, interest rates coming back down, everything becoming a little bit more stable again, and just bringing the confidence back to the business market. But for now, that's what we saw last week. Pretty significant move up and a reasonable close above there as well. I am on a monthly chart, so a longer term outlook here, and it's closed above the 50% level as well. So pretty significant move there on the yields. So we've looked at the dollar, looked at the yields, looked at the bonds. Now for the stock markets, pretty reasonable bounce here as well. Another half a month to go. It is the 14th, so just over half a month. A good close above the previous swing low, and a nice bounce off the 50% level. So although things are breaking in the background, I've looked at this many, many times before as this being one of the final moves into that final blow-off top. And we saw very significant pullback after our 3-bar rule here at the top. If you guys following along with the channel know about those 3-bar rules. You can use them on your daily or your weekly charts, and they're pretty significant turning points, as we'd shown with Bitcoin at the top there in December. Now, I think this is the tricky part, because on the one hand, you're seeing things start to break down. It doesn't mean that it's over, but you're starting to see things break. And on the other hand, you're seeing prices rise here, coming back up. But like we saw with each of the previous tops, you get a fair bit of volatility into the peaks with, I guess, the political party in power at the time trying to calm the environment, and then eventually things all come together and they all break all together. We had 2007 into 2008. There was a fair bit of instability towards this peak as well. You can see June that dumped into the August low and a big bounce out. You had 2000 peak after the dot-com bubble, obviously 1998, 1999. These are pretty significant moves from the highs to the lows, in this case 22%, similar to what we've seen now, and the market was still able to recover. So how are the traditional markets affecting Bitcoin and crypto? So I hear you ask. Well, the daily closes have been relatively good over the last few days, especially coming out of the middle of last week. The weekly close has been relatively okay, still aiming at a target of $92,000, as I mentioned here on X as well. So we're looking for the overbalance in time and price. Understanding the theory around overbalancing in time and price basically puts you in the driver's position to understand when you're going to get a trend change in the market. Now, it is a more detailed course. You can find that in the masterclasses if you are interested in TIA Premium, basically extending your knowledge in trading and investing. If you're looking to do this a little more than just chucking a couple of bucks into the game, you want to do this a little bit more long term. So I definitely encourage you to check out TIA Premium. This, along with the overbalance in time and price, that is, along with the 3-bar rule that we look at on the channel quite a lot, that has helped us also identify changes in trend, the tops and some of the bottoms, are fantastic tools to add into your trading plan, along with your 50% levels and extensions. So putting this all together can basically put you in the driver's seat for navigating the end of this cycle and coming back into another low. So Bitcoin's in a stronger position than the total crypto market cap on the back of this breaking of the financial system at this point leading into the peak. Now the total crypto market cap is underneath, for now, the previous highs here of March 2024, whereas Bitcoin was above those highs. So it's in a slightly stronger position. Now, ideally, at the end of this month, we do see some closes at least above 2.75, somewhere around 2.85 trillion. That would set it up so that it's closed above the previous highs as opposed to underneath them. What can happen, and the probabilities would just sort of sway further for this happening if you get the lower closes, is that the move to the upside would be either A, a lot less than BTC, so maybe just breaking the tops, because at the moment Bitcoin's in a stronger position, or B, you basically just get a lower top, maybe a double top, maybe even a lower swing high form, and then a big collapse from that point. So you just don't see a new fresh high from there with the lack of strength on the market right now. That leads over to Ethereum, which is most definitely in a very weak position here, underneath many swing highs, underneath many previous support levels, and attempting to try and base out here along with the low at the banking crisis. So until it can get back above $2,200, it's still in a relatively weak position with any of these sorts of rallies. The next thing we look for is going back to the overbalance in time and price to see whether we got some strength here. And again, those theories alone can save you an absolute ton of money. With many accounts talking about how strong Ethereum is, how you should be getting into ETH, there's really been no signs of strength yet for the Ethereum price to be going up. We've given you a couple here. We'll keep following it on the channel as well. USDT dominance has closed relatively okay for the bulls. It's still above the diagonal downtrend. The volume has increased here now that we've got a rejection at about 6.2%. And what the bulls want to see, this is the crypto and Bitcoin bulls leading into this final peak, some closes underneath 5%. So that's your swing low here and the 50% level. And then to continue on underneath 4.7. That's going to give a lot more strength back to the game. The thing I'll remind us all about here, including myself, is if we start to see the dominance fail again at the diagonal uptrend here, or not be able to break roughly around the 4 or 3.7%, that could be another warning sign that we basically have come to the end of the Bitcoin bull run. Like, it hasn't happened yet. We still have a fair bit of room here. But seriously, if we do not get any sort of significant breakdown of this zone, if the dominance continues to fall here, that is another sign that the game is over, and you're probably going to see the dominance increase, which means probably going to be less money running into Bitcoin and cryptocurrencies, even if the rest of the market is still going up. Maybe the stock market's still going up. Maybe you've got some real estate prices still going up. Maybe some commodities are still going up. If this thing is not breaking down, then watch out. This is what happened last time. You had the Bitcoin low here in May, June, July. The dominance fell, and then Bitcoin put in a new all-time high, barely, in November of 2021. That fell on the diagonal again, put in a higher low, and the dominance took off from there. So this, I think, is going to be a really, really key chart to be watching should we lead into another move to the upside. Now, in terms of timing for the upside, let's have a look at Bitcoin as it's charging ahead early in this week, 1.6%. We're hitting 85,000. The fear and greed index dropped off again last night. Obviously, we had a bit of a fall on the price, but nothing too dramatic. The fear and greed index is at 31. Now, the timing for the market sentiment resetting is only a couple of weeks away. We're at 14th of April today, and I've got a date here roughly around next week, later next week. So just short of 2 weeks here, which would give us that approximate 5 months. Now, if we look back at the previous move, you got the 5 months from the top to the exact low. Give it another month or two. You can see here, that's August. This one is September. This one is October. So you've got 2 more months there of the market trying to grind out before it puts in a higher low and then to the top. Give it some breathing space after it finds that final energetic flush out, and then we could start to see some significant highs get broken. In this case, we're really looking at around $92,000 to $95,000. Those numbers really haven't changed because the low's been put in. We've still got the swing top here and the overbalance in price as well. There are some clear signs of the traditional markets breaking, which means there's probably less time for Bitcoin and cryptos to have a significant move. Obviously, anything can play out here. We could see the thing shoot straight up now and take everyone by surprise. On the flip side, it could grind out a lot longer, like we've looked at with the cycles for the stock markets throughout 2025. I also went through some price targets on Bitcoin. I'll leave a link to that video right above my head right now. So go ahead, check that one out. Let's navigate this end of the cycle together, and I'll see you back here at the next one. Cheers.